Sangam, by way of background, is an annual event where bankers and government officials huddle together to discuss fundamental issues like capital requirements, appointments, HR, basically technology, and generally the way forward for state-owned banks. Right now what's threatening the system is the massive pile-up of non-performing assets or loans that are not getting paid back. One message from the Sangam appears to be that while the government and the regulator are willing to provide a helping hand, the message to bankers is pull up your socks and recover the money from defaulters. But how effective is all this Gyan, and what really are the key takeaways? Joining me now to discuss this are two very special guests, former State Bank of India Chairman Mr. A.K. Purwar and Leo Puri, currently Managing Director of UTI Asset Management Company, but a well-known veteran and advisor of the banking system. Gentlemen, welcome to the show. But before we get to you, let me go to our two moles in the banking system, in the Gyan Sangam. That is our reporters, actually, Ritu Singh and Alex Matthew, who were doing the rounds of that SBI campus in Gurgaon in New Delhi, where the Sangam was held. They have some key takeaways from the press conference and some key takeaways which they have got by putting their ear to the ground and getting a little bit of gossip, overhearing something. So let me straight away go to them. Ritu, Alex, what do you have for us? Ritu, you go first.
Well, the resolution of stressed assets was clearly one of the key themes that stood out in the second edition of the Gyan Sangam. No sweeping changes, but what the bankers have suggested is various amendments to both the SARFAESI Act and the DRT, and the idea behind that is to really speeden up the process of resolution of bad loans. The use of technology was also suggested to make the process more compact. In fact, what was also taken up was reducing the number of banks in a joint lenders forum to ensure a speedier resolution is arrived at and a faster decision is taken by the banks. What is also important is the presence of the CVC in all of this that was roped in to ensure that no questions are raised on such processes at a future date. Even the asset reconstruction companies were asked for support and more participation in the resolution of stressed assets. So while the focus so far has been on recognition of the problem, clearly going ahead the focus will be on resolution of the bad debt.
Well, from the face of it, if anything is to be taken from this year's Gyan Sangam, it's that the government has committed itself to the process of consolidation of PSU banks. Now, the banks themselves have suggested the setting up of a panel, an expert panel, to study how this consolidation will take place. Now, the government is not exactly sure whether this panel will be set up, because the newly constituted Bank Boards Bureau will also be looking at how the strategy for consolidation will be formed. But the clearest statement came in from the finance minister today when he said that strong banks rather than a large number of banks is what will be preferred going forward. Now, the different possibilities for this consolidation could very well be a phased process where initially the subsidiaries of these banks could be merged with the parent, followed by a sharing of processes between banks, and then subsequently the merger of weaker banks with stronger banks, and that could very well be, according to the FM, on the basis of geographical presence and sectoral strength.
First relates to consolidation of several banks. Now, the bankers themselves have, in the Gyan Sangam, when they met by themselves, have strongly supported the idea. You need strong banks rather than numerically a larger number. And some of them which independently survive and sustain well can sustain as niche banks even in regions. What is the strategy for this consolidation? The bankers themselves have suggested an expert group to immediately go into this issue. We will consider that suggestion.
All right, so consolidation has come in as one suggestion. That's important that the bankers are agreeing to it. Until now, chairmen of banks were one big stumbling block because nobody wanted to give up their position and merge into another bank. But now the bankers are saying it themselves. It's quite possible they are saying that because now very clearly many of the banks, or at least one or two of the banks, have got private sector heads. So probably, this issue of chairman, the desire for a chairman's post is not so much of a handicap anymore. But I think Mr. A.K. Purwar, our guest, is best placed to answer that. And of course, Mr. Leo Puri is also with us. Mr. Purwar, this suggestion of consolidation is a very old one. Mr. Chidambaram pursued it for a very long time. Do you think now the time has come that we will actually try to whittle down the number of banks?
Yeah. Not only if you see the present position where the economy stands, the way in which the economy is growing, this country badly requires at least 5 to 6 banks of the size of State Bank of India who are able to compete in the domestic market and who are able to complement each other in the global marketplace. And therefore, consolidation has been the need of the economy for the last couple of years, maybe last 1 decade. And going forward, it is much, much more required. So not only it gives the benefit of size, it also reduces duplicity, takes care of duplicity. It also rationalizes the staff, rationalizes the branches. So the profitability also gets very profitable.
Sir, actually I think you put your finger on it. At a time when getting talent, top-notch talent for 27 banks is a problem, I guess, the staffing point that you make is very, very relevant. Just hold on to that thought, Mr. Purwar. Mr. Puri, since you were there at the Sangam, I more wanted your view on this. I hope the idea was not to merge the weaker bank with some of the stronger banks. If at all that idea comes, then on Tuesday the public sector, the strong ones' shares are going to fall like a ton of bricks. I hope that idea was not considered.
I think that was the idea at all, Lata. In fact, the fundamental idea behind consolidation at the end of the day is to reduce the financial liability on the government and on us as taxpayers eventually, and therefore putting weak banks together is only going to enhance as opposed to reduce that. So it's not an end in itself. Consolidation is part of a process to essentially create a more sustainable financial burden and eventually, hopefully, redefine the relationship between the government and the nationalized banks. I think underlying this is also a broader debate, which I think is now the right time to be given a broader airing, and the Gyan Sangam was not necessarily the place to do it because it's only public sector bankers. But the question we also have to start asking is whether the objectives of nationalization as they were originally conceived more than nearly 50 years ago have been fully met, and we are now getting what are clearly diminishing returns out of the governance structure that we have. And what is really the exit strategy from that? So I think what you're seeing is the government setting in motion a discussion around that exit strategy.
Oh, that's very useful. If you're saying that, exiting from nationalization as a concept was what the government is thinking about, is that right?
That is my interpretation of the various steps that are being taken. It is not what they are saying necessarily. It is my personal interpretation when I look at the approach of the asset quality review and the way that is being pushed through. When I actually look at the measures announced in the budget vis-a-vis IDBI, when I actually look at the meaning and the end game, if you like, of consolidation, I think we are seeing actually the beginning of a serious debate. And you have to put this in the context of what happened with the Nayak Committee, the creation now of the Bank Board Bureau, which might lead to the bank
Mr. Puri, despite the Nayak Committee very clearly saying that the government stake should go below the 50% mark, the government has not been forthcoming on that issue at all, and at the press conference, the FM and the Minister of State for Finance didn't refer to it. So let me not get to that idealistic situation right away. Let's first discuss consolidation a wee bit more. Mr. Purwar, one of the things which bankers were even before the Sangam speaking were that consolidation on a platform basis. Some of them have the TCS technology, some of them have Finacle, Infosys technology. Should that be the way to go, the platforms? Or will it be geographical? You get IOB, Andhra Bank, Indian Bank together and rationalize the branches and have one branch geographically south so that cultural disturbances are not there? What would you think is a good idea?
You see, the way in which I look at it is that, well, there are certain banks which are very, very strong, very, very strong, having very solid presence in some select areas.
Yeah.
So, and in certain businesses also there are certain banks which have huge domain expertise and knowledge in a particular sort of business. So it should be both. One regional should also be attempted in this manner. But more importantly, the business-wise, Lata, I have always been feeling that the services sector, which contributes so significantly to the growth of the Indian economy, it doesn't have any particular bank to be catered to the specialized needs of the services sector of the economy.
Okay.
There are some banks which are doing that, but that has to be taken forward. So my assessment is that this will happen, this will grow.
Okay.
The regional will be the first, but then activity-wise also, the consolidation.
Okay, so banks which specialize in lending to the services sector is what you would think of. Well, there's just one more point on consolidation which I wanted to, ask Mr. Puri, since he was in there. Was the exact opposite discussed at all, Mr. Puri? I mean, I heard a reference to niche bank. I was hoping some banks will be allowed to die. For instance, Indian Overseas Bank. I mean, the South is extremely well banked. They have a tradition, some districts like Nagapattinam have always had very good private sector banks. Ernakulam is 100% banked. There are a bunch of private sector banks there, Federal Bank, South Indian Bank, Karur Vaishya, LVB, City Union Bank. It's well banked. And then now with technology, Hyderabad, Chennai and Bangalore are digitally very active cities. There are 4 small banks licensed over there. Ujjivan, EFAS, Janalakshmi, and there was one more who are Equitas in South. It's already well banked by the private sector. Should we not just give euthanasia to some of those banks which have about 12% NPLs? Was that a plan at all?
Well, I think the Minister of State has been quite clear in saying there are 2 routes forward. And the hope is that this would in some sense be a voluntary bottom-up process, so that can be debated. But the idea is that either banks will come forward and accept an architecture where they see it in their interest to merge and consolidate and create more viable banks because of economies of scale and scope around technology, talent and capital. Or if they choose not to do so, then they have an option to develop a strategy as a differentiated bank with a niche strategy. Now, whether or not that is feasible in a world which is as competitive as it is, and this was also discussed, given the enormous shifts that have happened in the competitive arena, new licenses, as you say, have been issued, you have technology which is driving payments banks, will you really be able to compete effectively today as a niche bank? But nevertheless, that option remains that if you don't wish to become part of an agglomeration or an amalgamation or a coming together of banks, you in theory have that option to demonstrate that you can develop a viable strategy. The notion of euthanasia is of course a premature one from a political perspective, but I actually do think maybe a year or 2 from now, when we get back to that issue around how do we exit, if you like, from the decisions made 50 years ago, I think that will be back on the table. But it's a marketplace that will determine that. I don't think you're going to see a political decision to actually obviously shut down banks.
I really wish, sir, it is a marketplace, because that's what we heard in the first Gyan Sangam, that consolidation will not be forced by the ministry, but that the boards of the banks will be strengthened by the Bank Boards Bureau, and they will, bottom up give ideas about whom they will merge with, even if it were a private sector entity. Mr. Purwar, shouldn't that be the way forward? This whole suggestion by the bankers that an expert committee should be appointed and that committee should suggest consolidation, isn't it nonsensical? Isn't it? I mean, I don't know. I wouldn't dismiss the thought. I'm not such an expert on that. Wouldn't it be better if the boards are strengthened by this Bank Boards Bureau and the boards recommend what to do, whether they should become niche or whether they should, hold out their hand to another bank?
You see, the point which you are making, theoretically, yes, it is very correct that the board should drive. But you know what happens? Every illegal banks now, that they're looking to the government for capital support. A lot of banks have huge problems in respect of asset quality. There are certain banks which are really terminally sick. So it has to be a mix of both. One, it has to be Like we are reorganizing some of the big banks with the strong banks.
Okay.
Some of the regional banks will have to be made stronger, and four or five banks will have to be of the size of State Bank of India.
Fair enough.
So this is a good opportunity for the system to have at least 4 or 5 very big banks operating in the country.
I take your point, sir. Whichever the route, whether it comes from the banks themselves or whether it comes top down from the government, the way forward should not be 27, but probably 5 to 10 banks. That point is well taken, Mr. Purwar. Thank you very much for joining us, Mr. Purwar. Mr. Puri, I'll keep you in for a little bit longer. We'll take a break, and when we are back, we will also have Abhizet Diwanji of E&Y joining us. Back in a minute. Welcome back to this very special show, Gyan on Banks. The key takeaways from the Gyan Sangam, which is a huddle of the idea is to discuss the way forward for public sector banks. Now, one of the main issues was not really consolidation, but the bad loan mess, the NPA mess that banks are now bearing. Ritu Singh actually caught up with the India head of financial services at EY, that's Abhizet Diwanji, who was also present at the Gyan Sangam, to get an idea exactly of the extent of the bad loan picture and the government's thinking on the matter. Let's just hear him out.
I think a lot of it was deliberated to say that we need to be high on technology and digital. Okay. There was a big discussion around that. There was a big discussion around the fact that NPA resolutions should be more aggressive and timely. Right. And I think the banks have said that we'll try and reduce the number of bankers such that the resolution can be more timely and more business oriented. All in all, very positive. I think the bankers have got a lot more confidence that they can move ahead without being questioned or judged on anything.
I'll come to the CVC a bit later, but first on the stressed assets, Mr. Sinha mentioned there's 8 lakh crores in the system right now. After the AQR 1, how much of that has been dealt with? And number 2, on NPA management specifically, are there any new schemes that are being discussed as far as resolution is concerned?
I think government, I think the bankers are actually now in the process of actively resolving, and by March 17, as they say at the deadline, I think a lot of it will find its way to resolution by that time.
Okay, Mr. Puri, on this resolution, were there any strong ideas about ARCs or private equity or the stressed asset fund that Gyan Sangam was speaking about?
I think there was a very constructive discussion. In fact, I think Dr. Rajan put it quite well when he said, in a way, many of the tools that the RBI has given the banks, SDR, 520 and so on, CDR, all the various acronyms, these are all ways to, in a way, fill the gap because we don't yet have a fully developed bankruptcy code and resolution mechanism in place, although we are told that it's coming. And in the interim, these are the best tools that we have. But there was a lot of discussion around how you could actually strengthen the DRT and arbitration processes. And of course, the hope was being held out that the bankruptcy bill and the insolvency process would actually come through as a legislative mechanism over the course of this parliament. Okay. So that would be a sea change if that were to happen. Okay. Alongside that, the mechanisms for digesting the current set of assets, yes, there is a very, I think, attractive proposal around a few of the larger banks in the system coming together to create a stressed asset ARC, where they will take a much more dynamic and clear, if you like, responsibility for leading resolution for specific sets of loans, and different banks could take the lead on different loans. I think that was a good idea and one that has the potential to work quite well, actually.
Okay, that's good to hear, Mr. Puri, from you. RCIL actually is floated by State Bank and other banks, so maybe, and some private sector banks as well, so maybe that could be the key agency which could be capitalized further either by the government or by the banks. There's just one last issue I wanted to discuss. The CVC addressed the bankers. You think there is now greater understanding or support from the government and the CVC to the banks that if they sold a 100 rupee asset for 10 rupees, they will not be questioned about cronyism or, corruption? Do they have that confidence now?
Actually, I think, Lata, these are very nuanced issues. I think there's a very sincere and very well-intentioned attempt on the part of the government and the minister to provide that reassurance. But as you know, this is a broader issue across government. It's not just in the financial sector. And when you use language like, say, honest decisions taken with good judgment, with reasonable judgment, etc., will not be questioned, even if they go wrong. Most seasoned bureaucrats, and for that matter bankers, will tell you they don't quite sort of believe that. Because there's a lot of room for interpretation as to what with hindsight will have appeared a reasonable judgment, and who is actually going to make that inference. It's a bit hard if you're in their shoes to actually assume that you're being given some kind of blanket immunity simply by a reassurance that reasonable judgments taken in the best interest with good intent and in the absence of any obvious corrupt intent will be, if you like, held to be honest mistakes. So we don't have a tradition or a culture of actually accepting honest mistakes, and I don't therefore think that that will radically alter anything. Frankly, it just epitomizes how difficult it is without addressing the underlying issue of ownership and governance to change these issues. Issues of talent, accountability and so on. I commend the fact that we are trying to do everything we can in that direction, but it's hard to be more than incremental on those measures under the current scheme of things.
I think you put it admirably.
I'm not sure how much solace, I'm not sure how much solace, to be honest, the chairman in the room would have drawn from these reassurances.
Mr. Puri, you put it admirably that it's very difficult for chairmen of banks to be given, or for them to get the assurance that decisions they take will not be questioned on hindsight. But that really is a very big problem. Not everyone is sure that the chairmen are, that the bankers have always been honest in dealing. At the same time, everyone knows that, a bad banking decision or a bad business decision should definitely be very different from a fraud. And what CVC should question will be fraud and not failures. But who will draw that line? Well, there is a Bank Boards Bureau, and to head it, to chair it, is someone who knows both sides. Mr. Vinod Rai has been banking secretary, and he was auditor par excellence, so hopefully he will be able to steer that line between fraud and honest failure, as also lead the government from government as shareholder to government as investor, and run commercial banks as commercial institutions and not a fiscal arm of the government. We hope some good will come with the Bank Boards Bureau. Mr. Puri, Mr. Purwar, thank you very much for joining us in this conversation. Out of time, thank you for joining us.